Kingsoft Cloud reported record second quarter results for 2026, driven by surging artificial intelligence compute demand. As China's leading neutral third-party cloud provider, backed by the Xiaomi and Kingsoft ecosystem, Chairman and Chief Executive Officer Zhu Dao overseen record revenue growth alongside a loss narrowing sharply toward break-even. An exploding AI cloud engine powered the milestone performance. Total revenue reached a record 3.07 billion renminbi, or about $452.8 million. 3.03 billion renminbi. Adjusted EBITDA came in at 1.10 billion renminbi, delivering a strong 35.8% margin. The non-GAAP adjusted net loss narrowed sharply to 60 million renminbi, or 0.02 renminbi loss per share, outperforming the projected 0.12 renminbi loss estimate. Public cloud revenue climbed 45.1% to 2.36 billion renminbi. Within that segment, AI cloud gross billings surged 82% to 1.33 billion renminbi, now accounting for 56% of total public cloud revenue. Business tied to the Xiaomi and Kingsoft ecosystem contributed 810 million renminbi, up 28% year-over-year. Across the board, persistent enterprise demand for specialized AI compute remains the central growth driver. Analysts on the call zeroed in on execution. Liping Zhao from CICC asked how open-source model advances affect model-as-a-service growth and resource allocation. Management replied that Chinese models like GLM and K3 are driving web coding adoption and agentic workflows, prompting the release of Agent Kit. Computing power leasing secures 100% utilization through long-term contracts. Wenting Yu from CLSA questioned chip procurement progress and full-year capital expenditure guidance given slowing enterprise cloud growth. Executive Kaiyan Tian explained that supply chain constraints are the long-term new normal. To handle this, Kingsoft Cloud expanded supplier partnerships and increased compatibility with domestic inference chips, keeping full-year capital expenditure expectations fully intact. Timothy Zhao from Goldman Sachs asked about competitive positioning, pricing trends, and customer retention. Management highlighted its neutral stance, noting that because it does not own a proprietary large language model, it can sell whatever model best fits customer needs. Additionally, successful price increases in storage and compute were readily absorbed by customers due to high intelligent computing demand. Wei Jian from UBS inquired about long-term positioning against full-stack providers and margin sustainability. Executives stressed that strong relationships with leading model labs enable deep technical integration. By optimizing inference efficiency on undisclosed model weights, Kingsoft Cloud matches the operational performance of core artificial intelligence developers to protect long-term margins. Yang Liu from Morgan Stanley requested details on the return on invested capital for computing power versus model-as-a-service. Chief Financial Officer Lei Yi stated that model-as-a-service delivers higher profitability than raw compute leasing. As operating leverage expands and trailing 12-month adjusted operating profit turns positive, fixed costs dilute to drive a steady recovery in overall return on invested capital. This quarter marks a structural turning point for neutral cloud infrastructure providers. Soaring artificial intelligence workload demand is pulling independent operators out of deep losses and straight toward scaled profitability. Assuming high-performance compute investments remain sustained,